Hello. Welcome to another video from 10x Investor Education. This video is about how I made 5x on stock warrants in a month. When to buy SPAC, stock versus warrants versus options. So I will go through in detail what is the best time, when is when is the best rate price to buy warrant versus a stock or options, and how to pick SPACs. Okay, so let's look into the details of the video. Before getting into the video, this is a standard disclaimer. Do not buy these stocks because I bought these. I bought these like a month back. They went up by 5x in a month. Okay, so you need to look for other stocks that I'm buying, a new stack warrants, new SPAC warrants, rather than focusing on the stocks. This is just I'm showing you to give an example how you can make ton of money using SPAC warrants. So I'm not your financial advisor. Please consult your financial advisor before buying any stock. This is just my opinion. I will let you know position each stock. Please click the like button and subscribe at the bottom of the video and turn on notifications so that you don't miss any notifications. Okay, so let's get into the details, and every fact of this is true. I will show some of the stock charts, but all this thing what I'm telling you is true within last 1 or 2 months. So I made anywhere between 50 to 600% in stock warrants in last 2 months. So one of them is 600%, but on overall, some of them 50%. So anywhere between 50 to 600%. So my portfolio, which has just warrants, exploding compared to other portfolios that I don't have warrants. Okay, so 12 companies that I invested in warrants, 11 are positive, and only one is negative by small percentage. Again, out of 12, so 11 are positive. Okay, so that is more than 90% success rate. In my view, trading warrants is much safer than a lot of penny stocks. So if you can double in or triple your money in a month or two, I know penny stocks you can get a lot more money, but you can lose a lot more money too. So why do you even think about penny stocks? So that's why I keep telling people, hey, focus on warrants, focus on invest them in an early stage when they are $1 or $2. You can make a lot of money when they go up. So the only thing is you have to pick the right warrants, like stock warrants. Okay, so and also this is my opinion about SPACs versus IPOs. Okay, in general there is a bad opinion about SPACs. Okay, so most of the SPACs are pump and dump, which I completely agree, and IPOs are different. IPOs go through different scrutiny, severe scrutiny via SEC, and also a lot of companies scrutinize, analyze before going to IPO. That's the reason a lot of companies they cannot go to IPO, because it's a long process and they need to spend a lot of money to get into IPO. Okay, but good SPACs in general are less overvalued than IPOs. Okay, let's take an example of Doordash, which opened at $172, and Airbnb opened $145 this month. Okay, so initially Airbnb was priced at $62. So much demand, they try to take the advantage of timing, because for example Doordash being COVID, and they know they're growing revenue last quarter, 2 quarters, and they took that advantage, and that they decided this is the best time to go to squeeze every penny from the investor. Okay, so similarly Airbnb, right, they're coming out of bad quarters, so they looked at the demand and they saw, and they started with $62, and then there was so much demand from investment banks and retail brokers, and they sold the stock at much cheaper price than when it opened in the market and started trading at $140. So okay, so Doordash started trading at 172, and Airbnb started trading at $140. So this is, for my view, ridiculous valuations. Okay, so if I buy Airbnb at Doordash $172, first of all, it might go down a lot if the economy comes back. Okay, or by the time I want to make double or triple the money, it's going to take forever. Okay, why would I buy Doordash when I can make so much money in SPACs? Okay, so that's what I'm trying to say. But IPOs are better scrutinized than SPACs. SPACs is more like a backdoor way of getting your money. Okay, and sometimes companies know that they'll never able to go to IPO through traditional process because of the scrutiny and amount of time it takes and amount of money you need to spend on IPO process. So they try to go through SPAC process, easy money from you. Okay. So what I'm trying to say is there are a lot of bad SPACs out there. So you have to do enough research or follow the experts. Okay. So this is on November 14th, just before few days that I posted QuantumScape and Romeo Power. So you can look at these videos on my rest of the channel, and you can see I posted QuantumScape versus Romeo Power a month back. Okay, before that I was buying QuantumScape, I was buying Romeo Power. So after buying a couple of warrants and then Romeo Power, I posted those videos, and I posted multiple videos on Romeo Power as well. Okay, I bought both stocks and warrants in RMG as well. So if you look at compare 1 month back and now, okay, so look at this charts. This is RMG Acquisition Corporation. These are all warrants I'm showing right now. So 1 month back, like November 25th is when this is the price around $2.60-50. Okay, now it is $14 close to. Okay, so look at this Replay Acquisition Corporation. I told a lot of my friends to buy the warrants below dollar. Okay, around 96-98 cents. I bought like 1,000 warrants. So now within less than a month it doubled, the price doubled, literally doubled price on a month. Okay, so if you look at the news, there was a great quarter from Finance Company of America, that is where it is merging with, and then they showed very good results that triggered the price. Okay, so next thing is Gores Holdings, which is also a low risk money making mortgage company, right? So 1 month back, if you look at it, it was trading at $1.20. Okay, nobody is interested in this because it's not an EV play, this is not a tech play. Okay, so then now look at the price, it's almost 3 times. So this is all in 1 month, and I can show you like whole day and night how many of them went up like 300 to 400%. I invested in all of these, and my portfolio that has these warrants is exploding. So the reason why, if you look at it like 5 days chart, right, it was like $2. It within 5 days it doubled, $4, $2, $4. That's in 5 days. Okay, how many companies you can double money in 5 days? Okay, so what I'm trying to say is because there was a good news and also upgrade. So if you look at here, Gores trading are trading higher after Web Bush initiated coverage on stock with an outperform rating, announced price target of $13. So the stock was trading for $9.80 to $10 for a long time. Okay, so once quarter results were good, and then it doubled within week. So it similarly it could happen with Finance America. What I'm trying to say is, so if you go back to what I bought, so I bought all these. So this is the detail I'm showing. So RMG stock $12, it went to $34. Okay, 2.8x. RMG warrants within the same period went from $2.80 to $13.08, which is 5x. Okay, so I bought both. Reason is RMG stock, I can do options. I can get around $12 for covered calls. Warrants, I can't do that. So this one, I'm a big bet because after QuantumScape went up, I know this is going to go. So this is not as good as QuantumScape, but with the momentum it has, and it is the number of contracts in the pipeline, I thought it will go. Okay. Similarly, RPLA stock was trading at $9.80, now $10.94. Only 10% went up within last 2 weeks. Whereas the warrants went up from 96 cents to $2. That's more than 100%. Similarly, Gores. So Gores stock went from $10 to $12, 27%. Whereas warrants went from $1.50 to $4, which is more than 50%. So why do you think warrants are going up much than stocks? Okay, so that is called something called leverage ratio. Is the most important and that you need to understand. If you don't understand, there are a couple separate videos for warrant leverage ratio. So 2 weeks back, RPLA leverage ratio is 10:1. Okay, what does it really mean? So for every, because it was trading at 96 cents, the stock was trading at $10. So the ratio between the warrant price and the stock price. So potentially, if you look at it, if the stock goes up by 1%, stock goes up by 1%, the warrant can go by 10%. That's what it's trying to say. So that's the reason why, if you look at this one, right? So RPLA, percentage of warrant, see how much it went, 14.3%. Let's look at stock. So exactly 1.4%. 14% was 1.4%. That's 10 times. This is how it has been trading for last couple of days. Now when the stock goes by 1%, warrant goes by 10%, which is 1:10. So leverage ratio. So that is important. So that's the reason why it's very important to buy warrants when warrants are at 45 cents, 50 cents, a dollar or $1.20. And then as the merger process goes up, comes to close, they are going to go they're going to go skyrocket, like $2, $3, $4, because RMG didn't even merge yet, right? Already it's $14 warrants. So that's what I'm trying to say. The leverage ratio matters. So when the warrants are cheap, buy the warrants. They are low risky. You can always convert them to stock by paying the money that you needed to pay. So I have several examples like above. Okay, so this is not just RMG, RPLA, Gore's holdings. There are a ton of these, and most of them are like that. So most of the warrant owners have to spend $11.50 to convert their stock warrant to stock. So when they are recalled, so this is called exercise price of warrants. So most of them are 1:1. So for every warrant, you get one stock after the merger. Okay, not now, after the merger. And then if they call for recall the warrants, and then you have to pay $11.50. So my thing is, why do you take a risk paying much for a stock when you convert a warrant into a stock by paying this much? So buy warrants initially, so that if the company is successful, if it's growing up, you convert them. Otherwise, if it's not successful, it's going down, you lose less money. Okay, you lose less money with warrants than stocks. That's the reason to buy warrants at the beginning when they are cheap. Okay, so let's get into, when do you buy warrants? When do you sell warrant? I mean, when do you sell options or buy options? So I want to go through that quickly. So buy warrants. So when leverage ratio is high, so such as RPLA, which was like 1:10. When you don't have a lot of money, you buy warrants because you are spending like $2 or $1.96. So you can get 100 warrants, and with $100. So in order to get a stock, you have to spend $1,000. So rather, I would own 100,000 warrants of RPLA than 1,000 stocks, which doubled money rather than going up by 10%. So you count the math. So here I'm trying to give you the formula. You count the math. How do you want to make money? So when you don't have much money, yeah, please buy warrants. When warrants are really cheap, like 50 cents to $1, and there does not move much momentum at the beginning, but it's going to skyrocket at the merger comes to close. Okay, that's where we are looking for. For example, if you look at RPLA and also Gore's holdings, both of them, they skyrocketed within the last 1 to 2 weeks, because there is a good news, there is a quarter results, there is also upgrade from the analysts. So that is what we cannot expect at the beginning of the warrants. So the worst case, this 96 cents warrant might go down to 80 cents or go to $1. But in the best case, it will go to $2 or $4 even. So that's where we are trying to, it's calculated risk. We are trying to say, hey, this is the money making company. This is a money making company. So the risk is less here. So it might not go 6 times like RMG, right? So the risk is less here, the reward is less. But if you know, I picked the RMG heavily because I know QuantumScape is going up. So I know the next alternative is RMG. So that's the reason I picked RMG. So obviously this is all hypothesis based. So that's the reason why it's 5x and this is only 1x or 2x. So And also you buy warrants when you're not sure any company or merger might blow up. So for example, RPLA, there was not much momentum, and the EV, it's not an EV, there was not much, price wasn't moving for a long time. So that is perfect time to buy warrants. When the company is really successful in merger process, you can always convert your warrants to, this is what exactly I'm trying to say. Okay. So next thing is example, when RMG merger blows up, for example, the stock market, the price of the RMG stock is $34. So, so this is what, so when RMG merger blows up, stock owner loses $24. So let me show you the RMG price. Okay, this is warrant which expires 2024. So let's look at RMG price itself, which is $14. The stock itself is $34. So $14, 18% up. Okay, the stock itself $34. Look at the percentage, how much it went up, 18%. So look at warrants again. So the warrant went up 24%. So still, even though warrants went up this much, this percentage of warrants going up is much higher than stock. Okay, so when RMG merger, for any reason, right, 90% of the companies, they merge, but there are a lot of times the merger blows up and they go back. So this is the worst case scenario. Then if you buy the RMG stock at $34, right, you lose $24 on each stock, which means $3,400 investment goes to $1,000 back. It will go back to $10 price from current $34. Whereas warrants owner goes back to $2, $1 range from $14 range. So there is a lot of money lost in stock depending upon when you buy. If you bought it $1, it's fine. But if you bought it now $14, for any reason merger blows up and your stock going to go back to $10, and then that is depends on which company they are trying to acquire next. That's the important. That's the reason, another reason why you buy warrants at the beginning, and then depending on how the process is going with that company, then you buy stock. Okay, so this is the reason why you buy stock. When you buy stock, when the stock price $11 to $13, which means just above, it could be even $10, right? So a lot of times $10 to $13 when your options are available for covered calls. For example, a lot of companies at the beginning, they don't have options available because there's not much volume and interest. So I think even Longview right now still doesn't have options. Similarly, RPLA, I don't know if they have options, but what my point is, so if you include a $2 warrant plus $11.50 conversion, $14. Okay, so if the stock price is around this, you probably want to buy stock, and you can leverage the risk with covered calls. After merger, when the price difference is close to $11 to $12, you can buy stock. When you have options availability and when you get them, lot of premium. So this is important. If you are trying to get a premium of like $1 or $2, I'm not going to buy, because I'm still going to buy warrants, depending on how much premium, so that you can leverage so much risk on it. So that is the reason why when you buy stock versus warrants. For example, RMG stock is $34 now. With a 40, so when you look at the options, with the $40 strike covered calls, you can almost get to $12 premium. Okay, that is close to 30%. So $6, which is the difference between 34 and 40 and $12. So if the stock price reaches after the merger to $40, your potential gain on the share is $18. With the stock at this point being covered calls are getting upfront premium. So when you do the covered calls, you are getting upfront premium and reducing the risk by 30%. Whereas with warrants, you cannot do, because when you buy, warrants are expensive. First of all, I don't recommend buying warrants at $14, $18 because they are expensive. You can buy warrants of other companies at $2 and gain the maximum. Okay, but if you want to buy into RMG, what you have to do is with warrants, you cannot do with options trading. So at that point, you buy the stock and you do covered calls to save yourself in the future 30%. So you're still getting $18 growth on the stock. Okay, so if, for example, if the warrant price fell by 30% suddenly, you don't have much protection. Whereas if the RMG stocks falls by $12 from $34 to $22, you still did not lose any money because you already got $12 on the upfront premium. So that is the risk and reward that between the stock and warrant. So basically the summary is, if you have options, if the price is better, then buy stock. Reason, if you look at it now, $34, right? So if it is still $14, the stock warrant price of RMG is $14. So 14 plus 1150 is $25.50. So the RMG stock is trading at least $10 more than warrant price. Okay, remember, $10 more than warrant price, which seems like after merger there is potential that RMG price can go down by $5 to $10. So as the merger comes to close, or by the time recall happens of the warrants, they come close to $11.50 difference. But until then, there's going to be a lot of difference between the stock and warrant price. That's exactly the reason why, because of the option premium, the stocks trade at a higher price than warrants. Okay, we saw when to buy warrants, when to buy stock. Okay, but let us say you don't have much money to buy stock. You have only few $100, but you want to get into RMG. So the other option is buying options. So when do you buy options? So I really don't like buying options. I really like to sell options and get premium. So, but I do buy options. Like 20% of my transactions are buying options, and then I only buy options, long-term options, and then I know for sure the stock price is going to go on strong fundamentals, and somebody else is buying the stock. For example, Longview, Open Door. I know ARK was buying from the beginning, and Open Door and Longview. So I bought options in those stocks because they are going to grow. So for example, I bought few weeks back, I bought Open Door options, and now if you look at it, the return on this, I bought it $2.60. It's around $7.40. The return is 180%. So when buying options, so with $2.60, I'm able to make, with $260 investment, I'm able to make $480 in like 4 weeks. So that's like close to 200%, 180% return. So and also if you look at it, the strike date is 5/21. I don't have to wait until then. I can sell anytime now, or whenever it goes up a little bit more. So this way, I'm not worried because I'm buying long-term options, and also this is a solid company, I know, and if it stays like this also, that is fine. So next is, so we saw buying options. So now let's talk about puts. Okay, so my favorite thing to do is actually, on top of buying warrants, selling puts. And even though I lost money in one warrant, this is the least risky way of making money in my view. So you can sell SPAC stock cash covered puts for in this price strike range. Okay, so $7.50, $10, and $12.50. So for example, the current stock price is $12. You can sell $10 and $7 stock puts. If the stock price is, let's say, $20, you can do $12.50, $15. That's what I do. So you can easily get 22%, 40% premium. And since SPAC stock cannot fall, this is most important. So SPAC stock it can fall to $9.50, 80 cents at all, but you can always call them before the merger and ask them to return money, because that is the guarantee they are giving us that your $10 is safe in a bank. So it cannot fall $10 before the merger. You have a lot of protection on this, and you can buy these puts for pennies and $1 within a few weeks. So you can finish the whole transaction, selling the puts and buying the puts back within even before the merger, and still make ton of money. Because in options, it's called time and decay. So as the date time comes closer, this option value goes down. If you spend $2, 60 cents, I'll show you. So I have not lost any money on this put so far, because I have been selling at a low risk. So I've been always selling puts around 25 to 30% current stock price. So I have not lost any money. And the return is not as great as warrants, but you still have much more protection against not falling. So this is what I'm talking about. I'm giving a couple of examples of puts I made. So a few weeks back, I bought DMYT, which is a Rush Street Interactive. I sold a $12.50 put, not bought, sold $12.50 puts. I got $2.80. So which means for this transaction, I got $280. Now I can buy back for a 1 cent, or wait until another 15 more days to expire. Okay, so I don't have to pay anything. So it'll expire. I know this is going to expire worthless. Same thing with skills. I sold skills $7.50 put for $104. So $7 investment, I'm getting $104 and almost 19%. I can buy back this one for 1 cent or 5 cents. So similarly with open door, you can see it went down by 92%. So on a $15 collateral holding the money, I got $400, which is like 40%. So all these are like 30 to 40% premium just for waiting and investing the money for 4 to 8 weeks. So these are the couple of puts. So this is the puts, this is buying options, and this is buy warrants. So far we have seen a lot of things. Okay, so let's get into rotate your money for max gains. So this is what I know and I heard. I heard 70 to 80% of the people sell before merger. Basically, they pump the SPAC until the merger, and before merger they take profit. Some stocks like QuantumScape, they're skyrocketed after merger. QuantumScape and Luminar, they skyrocketed after, not some, but a lot of them actually. Depending upon if there is a lot of interest in the SPAC from the institutional investors, the stock might go after merger. So you and me are individual investors, so we can take a lot of risks, but these institutional investors, they cannot or supposed to buy until merger. So they will wait until merger happens and then they can buy. Other thing is, after merger happens, a lot of people can open the stock and they're ready to sell on first day. So that's how. So you can't really tell which one is going to skyrocket, which one is going to go down, unless there is strong philosophy behind it. Okay. So if you own only warrants, you might want to consider selling some warrants and take profits before merger. Remember, and same with the stock. Either you sell them or you do covered calls to reduce the risk. For example, let's say RMG, for me it already went up by 5x. So it's almost impossible for RMG to go away another 5x. So remember, within next 1 month, it can't go another 5x. That's impossible. So my goal is to sell some RMG, rotate the money into next RMG for another 3 to 5x. This is how you grow your money. So sell some RMG, take the profit, buy another SPAC warrant, at $1 or $2, and wait for 1 month, let it go. That is how you rotate the money. One thing to remember is warrants have expiry date, unlike SPAC stocks. So SPAC stocks, fine. So warrants have expiry date, as I showed you before. For example, this one. So this one is expiring February 24. This one is expiring January 25th. What does it really mean? So like options. So when they recall these warrants, you have to redeem them. You'll get a notification. If you don't want to redeem them, you can sell at any time. But if you don't sell and if you don't redeem by the expiry date, they expire worthless. This is the only danger you have to remember with warrants. You have to remember the expiry date and you have to act before the expiry date. That's the thing. So conclusion. So there is a hell of a lot of information in this video. If you need to go through this video a few times, please process with your brain. But this is the way to make money. Once you see SPAC warrant returns, you'll probably sell off all your stock and just invest SPAC warrants. So, and I will, in my next video, I'll talk about how to pick these SPACs. As I said, not every SPAC is good. A lot of them are bad. So you need to pick based on certain criteria. So I'll talk about those criteria so you can pick your own favorite SPACs. So I really spent a lot of time in collecting my thoughts, research. So if it helped you, please click the like button if you like it, and leave a comment so that I know it helped you. And also, if any other SPACs that you want me to cover, I'll take a look at it, because some of the SPACs that made a lot of money came from viewers. So, and thank you. Merry Christmas, Happy New Year to all of you. Please wait for next video. I'm going to cover how to pick the SPACs based on certain criteria. Have a great day.